reviewing our performance during the year and our future prospects. I'm happy to report that we have made significant strides in strengthening our market position and executing on our strategic plans. During the year, the global business environment was marked by moderate to strong demand across various application segments and geographical regions. In the aquaculture industry, which has been our largest business segment in recent years, there was a strong demand for innovative products that offer significant operational cost savings, environmental sustainability, and ease of use. Simultaneously, the market for our geosynthetic solutions saw growing momentum due to demand from infrastructure and environmental protection projects. This trend was evident both in domestic and international markets. Overall, there was a marked preference for our top-tier value-added solutions backed by demonstrated capability to meet specific requirements, which led to improved margins. Responding to the opportunities, we achieved a healthy bottom-line performance underpinned by a strong cash flow position. I'm proud to report that we exceeded a profit after tax milestone of 200 crore rupees, marking a significant accomplishment in our growth story. Our profitability was driven by closer connectivity with customers in crucial international markets, a major increase in our geosynthetic business, and improved process efficiencies. These growth drivers, along with our solid financial footing, ensure that we are well positioned to navigate challenges and seize opportunities in the future. I'm delighted to report that our geosynthetic division recorded exceptional progress both financially and technically. We exceeded our revenue and operating profit targets. Our international presence was strengthened with key projects, including coastal protection and river training solutions in Central America. In the domestic market, we reinforced our expertise in reservoir lining and landfill capping. The completion of a complex project to control river erosion in the face of severe geographical challenges underscored our resilience and commitment to address customer needs. Additionally, in line with our strategy to refocus on the domestic market, we saw significant growth in our domestic value-added products. We earned total revenue of 1,325 crores for the year ended March 24, an increase of 2% from the previous year. Consolidated EBITDA increased by 22% to touch 315 crores, and consolidated profit before tax was 272 crores, an increase of 22% over the previous year. Our board of directors has declared an equity dividend of 30%, amounting to 3 rupees per share. Looking ahead, our focus remains on profitability by broadening our geographic reach and product portfolio with value-added solutions. There are several promising signs of success. We have received a positive response in key markets for our non-salmon offerings, indicating strong potential for growth. In Southern Europe, we are increasing our market share by expanding our reach to new customers and new geographies. Geosynthetics is a high-potential growth business for us, and we are focusing on both the Indian and international expansion. We are enlarging our sports product line and targeting new markets in South Europe and South America. While exports will continue to constitute the major part of our business, we are renewing our focus on the domestic market, and we plan to expand our range of value-added products, which is expected to increase our margins and strengthen our competitive edge over local suppliers in the coming years. India has been recognized as a key growth economy, and we are realigning our efforts accordingly. Our commitment to excellence is reflected in all activities. Our establishments in India have been recognized as a great place to work, and we are expanding our team overseas. Through key engagement initiatives, we are ensuring that we attract and retain top talent. We are enhancing our manufacturing process to further optimize our operations and efficiency, and sustainability remains at the core of our strategy, with our solutions aligning with the global environmental goals. Possible supply chain disruptions due to geopolitical conditions present challenges in the near future. However, we are well equipped to deal with these issues due to our strategic agility and strong financial foundation. In closing, I would like to extend my gratitude to our dedicated employees, valued customers, and shareholders. Your unwavering support and trust has been crucial to our achievements. As we continue to build on our success and explore opportunities for growth, I am confident that we will sustain and increase the value in the years ahead. I have to point out that, as can be noticed from auditor's report, there are no qualifications, observations, or comments on the financial transactions or other matters which have any material adverse effect on the functioning of the company mentioned in the auditor's report. As such, per the provisions of Section 145 of the Companies Act 2013, the auditor's report will not be read out. Further, as can be noticed from the Secretarial Auditor's report, there are no qualifications, observations, or comments or other remarks in the Secretarial Auditor's report. As such, the Secretarial Auditor's report will also not be read out. With some workers in the factory and 575 staff. Temporary is a floating number. We obviously have people coming and going depending on load and in certain more manual operations. You asked about the last bonus was in 1993, so it's certainly been some time. We have examined and we continue to examine the option of a split. So far, as also advised to us by bankers, etc., split has not added that much value. And finally, we are looking for maximizing shareholder value. So that's a process that is continuing. And Shashank, the CFO, is here. He is looking again and again, but we'll also be examining. We evaluate it almost every year and see how will it help finally shareholder values. That's really what we are targeting, which we will continue to look at. Regarding the physical meeting, I'll ask Sunil to take a look and we can see if that's possible. And we will get back to you on that. Mr. Saini, your questions regarding the operating profit margin, we do believe it is maintainable as we have grown the value-added products portfolio in our company. That is one of the key things that drives this profit margin, and we continue to work on that. So the R&D and innovation team is constantly working on a new product pipeline to add value to customers, and that is part of leading to the next question that you asked regarding patents. We have a few new products already where we have applied for patent. Two of them are in aquaculture and some other areas. So as the patents get approved, of course, we will inform, and that continues to grow in terms of the number of patents that we have. Regarding capacity utilization and CapEx, we are roughly around 80% capacity utilization, but the fortunate part for us is that our machines are highly flexible. So they can operate for aquaculture, fishing, and sometimes sports fairly flexibly. We do have and we do see cycles in the ordering patterns and use patterns of these businesses. So we are able to smoothen the capacity utilization because of this flexibility. As far as CapEx is concerned, we are looking and doing roughly between 30 and 50 crores a year of CapEx. This is where we need it. We can debottleneck, where we can add faster throughput. And a lot of the CapEx goes on improving finally in lean, not just in adding new machines. So it also goes in improving machines and adding capacity through that route. Regarding the sales mix that you were asking of marine versus others, aquaculture is roughly 30% of the sales and fishing would be roughly 20%. So if you take marine, it could be roughly 50%. But overall, the plus side for us also is that roughly 70% of the sales come from food. So aquaculture, fishing, agriculture, all of these finally go towards production of food. So this is relatively insulated, and that helps us even in periods like COVID to be insulated from economic cycles. So that's a significant benefit for us over there. Regarding the new marine policy, yes, there are definitely a lot of positives that have come from the government. We are also very hopeful of the aquaculture growth, marine aquaculture growth in India. So like we are seeing elsewhere in the world, India has a very large coastline and good conditions for aquaculture. So the new policy will hopefully help to drive that further. Mr. Gupta, the questions that you sent in, thank you for your comments, and the questions that you sent in regarding us doing quarterly con calls. We have looked at this in the past. Our belief so far has been that our job really is to work to deliver value and to run the business well. The con calls, they take a fair amount of preparation and focus and time away from that job by the team. So we have, in fact, consciously so far avoided it. We don't see that there's that much change quarter to quarter. By our press releases every quarter, we try and highlight the major items. But we will relook at this and see. We do for institutional investors, we generally meet twice a year in any case, and we do have those presentations also up on our website. So there is an update mechanism, but we have consciously so far stayed away from having a quarterly con call, which takes a lot of time and effort away, right from CFO onwards. The entire operating team has to put a lot of energy there. So finally, I believe even for shareholders, the best thing is to make sure that we're delivering good results. And that's where we should spend our time. Regarding the Red Sea crisis impacting the company, it has been a challenge. For us also, though, we have been very much focused on adjusting to it. So obviously, as you may know, shipping routes have changed. It's adding roughly 10 to 15 days in terms of delivery. But now that's something we're factoring into our plan itself. The bigger issue, of course, is the significant variations and fluctuations in freight rates and the availability of containers and ships and those kinds of things, which are more logistic challenges. But I think they will be short term, and we do pass those things through to the customer at the end of the day, and that's why we're able to maintain margins. And customers also, it's a very transparent, shipping indexes are very transparent globally. So the customers also understand the changes in freight. So it doesn't impact us that much. It's more a short-term impact, longer term, not so much. How does the company see the Indian market in terms of growth opportunity? I think I mentioned also in the speech that it's something that we have probably not focused on well enough in the earlier period. About 1.5 years ago, we did decide to refocus, and we have internally brought all of the domestic business under one new gentleman who's come in to take charge of that. That is certainly delivering results. We are, even the last financial year, not 24, we have grown quite well in domestic. And the entire domestic team has really taken a lot of execution drive, a lot of focus to get domestic growing again. So we're driving value-added solutions in domestic as we have been doing overseas, and we look forward to domestic being a larger and larger part of our business going forward. I believe I have covered all the questions. So if there are any other things that